Where are you calling in from, Elaine?
Dallas, Texas.
Dallas. I will be there next week for Bishop Jake's leadership conference, and so I'll be hosting the pre-show there next week. So I'm really excited about that. All right. So Elaine, how old are you?
I am 34.
34 years old, looking like you're 25. All right.
You are
And
kind. Thank you.
what's your question, sis? What's going on?
I'm actually a mortgage broker, and I wanted to add some nuggets to what you were sharing.
Please do.
So, yeah, some things that I want to share with your listeners is some things to also keep in mind to help with this process. Someone had asked in the chat, you know, outside of how can I go about this? Like I'm kind of stagnant where I'm at financially. Some things to keep an eye on are your property taxes. Depending on where you live statewide, that's going to affect obviously your monthly payment. So how much you can put towards principal versus what you're paying towards taxes or homeowners insurance or mortgage insurance if you didn't put 20% down. A lot of us acquired equity since 2020 if we bought prior to. Check to see where your property is at equity wise. You can probably knock off that mortgage insurance if you haven't already. That's one way you can save some money, especially on a monthly basis. Make sure you're working with an insurance broker or a trusted insurance partner that is negotiating for your homeowner's insurance on your behalf. Every little bit counts, and anything you're saving on one end can go towards your monthly principal if that's your goal.
And so, Elaine, thank you for calling in. Let's talk about this a little bit more because this is your expertise. Prime example, if you do an FHA loan, you're going to have a 20%. You're not going to have the 20% in FHA, right? Because you're going with 3.5% down, and then they do have forced mortgage insurance. The thing with FHA, and correct me if I'm wrong, right, is that even if you get down to, okay, you have 30% equity, they're still not going to drop it. You have to refi out of the FHA program into a conventional loan so that way you can get that money back. Am I correct on that?
That's a great point. So yes, however, if you did put 10% down on an FHA, you should be able to drop that mortgage insurance. But that's a rare occasion. Typically, people are putting 3.5% down. So yes, you should refinance out of the FHA and into conventional. Only if it makes financial sense. Don't go off and do that just for the sake of doing it. If you have a really great interest rate, keep paying towards that principal. That's going to be the better option because there are costs to refinancing.
Yes.
So that, again, just things to keep in mind. That can cost you, a couple $1,000s actually.
Let's talk about that. So let's say if I have an FHA, I didn't put down 10%. I have a 3.5%, right, that I put down. But I'm at the 25% mark, right? But I'm paying an extra $100, $200, $300 a month on forced mortgage insurance. What are the fees that are associated with refinancing out of it if I wanted to? So to go into a conventional loan, I know I got to bring closing costs for sure, but do I have to put down 20% if I'm refinancing into a conventional loan?
So you don't have to put any money down towards refinancing for like a down payment, since that was addressed early on. And again, you're using the equity of your property to bring it to more than 20% loan to value. So no, you don't have to put any money down, but you do have closing costs. And again, those are the fees that are associated with refinancing. Now, for some people, it may make sense, but for those who purchased homes in the refi boom in 2020 and during COVID, highly unlikely that they're going to want to refinance out of that rate currently. Your better option really is to really go aggressively towards your principal.
Yeah. I don't like mortgage insurance, the forced mortgage.
Yeah, neither do I.
The
very first thing I did was we didn't even refinance. We did something called the broker's price of opinion, which allowed us to remove our mortgage insurance because we did some updates to the house. And again, COVID allowed some equity.
Elaine, this is real good. I love that you called in. Thank you so much for being a part of the community and calling in to help us out, because this is your expertise. And I love this because this will help you pay off your mortgage sooner if you could get out of that PMI. Because what a lot of people don't understand is that private mortgage insurance, when people hear that, I got mortgage insurance. No. You don't have mortgage insurance. That doesn't go towards your principal. It doesn't go towards your interest, and it's not mortgage insurance for you. So there's two kinds on the FHA loan, or if you have less than 20%. You have the bank has their private mortgage insurance that only they can use and put into effect if something happened to you or happened to the home. And you're paying for mortgage insurance that covers you in case of a, house and stuff like that burns up and da-da-da-da. So it's like
Homeowners. Yeah,
homeowners.
two separate. So mortgage insurance is what you're saying the lenders have as protection for the liability of your loan, because your loan is considered a liability to the banks and to the lenders, to the financial institutions. And then you have homeowners insurance, is what you're referring to, what covers the actual structure and your private belongings. But yeah, you're paying both, right?
Yes.
Especially with an FHA loan. I don't love either. And that's why I encourage you to work with, again, either an insurance broker or a trusted insurance partner to help negotiate that on an annual basis, because those are fees that go up every year. So make sure that your, community, make sure you're working with someone that is advocating on your behalf to help keep that as low as possible and making sure you have good coverage. That's super important as well. You don't want anything to happen to the home and you not be properly covered. But that's one way you can make sure that you're keeping costs low outside of your principal and interest if you're really tied into that rate currently. I want to harp on one more thing because I know you got other calls to get to, but I just wanted to make sure that your community did get this. One more thing that you guys want to make sure you have, if you haven't already applied for it, is your homestead exemption for your property. That helps lower your annual taxes. So make sure that you've signed up for that. Make sure that that is on your property. Check with your county to see if that's currently reflecting, because that will lower your property taxes on an annual basis, or at least keep you under. I know, at least I can speak for the state of Texas, we have a cap of 10%. The county cannot raise our property taxes more than 10% than the year prior. So check to see what's going on with your county. Connect with a property tax professional, because that is one way to make sure you're keeping your housing costs lower on an annual basis. And again, any extra you get, throw it to the principal. This has been great, AO. We love it.
No, I love it. Now, Elaine, tell the people your information if they're in the Texas area and they're looking for a home, man. You came over here and blessed us. We got to help send you some customers too. How can they reach out to you? How can they reach out to you if they want to get into a home in the Texas area?
Yeah, feel free to give me a call at 972-565-6115. You can also email me at elaine@mpahomeloans.com.
There we go. Thank you so much, Elaine. I
Appreciate
appreciate you.